You've got two kinds of rallies going here. We got a U.S. market that's trying to break out, but it's being pulled down by Europe and China. And I'm not sure I see that that's going to change. You know, occasional good number here or there is not enough to reverse the trend. I'm a little bit pessimistic on Europe, and I'm not real optimistic on China either. So I think you saw the same comments come from Chairman Powell on 60 Minutes the other day.
So, Dory, if it's not, are you trying to say then that the U.S. is pretty much the only game in town, and for that reason that the market here just rallies because there's no other place to go for your money at this point?
Absolutely. I've been calling it the best of the worst. You know, our economy's doing a lot better than a lot of others. And if you look at the dollar, it's perfect evidence for that. That's one of the reasons why we have such a strong dollar. You come over here, we got a better economy, a better GDP, and higher yields. Why would you be anywhere else?
So if it is the U.S., there are places within the U.S. We've seen strength recently in places like transportation stocks and biotechnology and semiconductors. Dory, where would we be putting money as investors in the U.S. at this point?
Well, you know, one, you can argue for just the general market, just like you're saying, a lot of places, particularly like banks in here. I think big tech looks pretty good in a lot of spaces. I'm fearful of Facebook, of the news we just heard came out today. But a lot of the big banks look really good here, as well as regionals and community banks all up and down the board. They're growing. They got strong equity. They're taking market share. The big banks are taking market share away from worldwide banks. You have the problems in Europe with arguably the biggest bank there in Deutsche Bank having troubles. It's 40% off its high. It's talking about a merger with Commerce Bank. All these are good news for B of A, Citigroup, and J.P. Morgan. So I like J.P. Morgan here, but I think I like B of A and Wells Fargo even more.
All right, so we are at a stalling out point and have been over the course of the past 5 or 6 months, right at these levels in the S&P 500. What would make you more worried about the direction of the markets right now?
I think it's the same worry that the Fed has, is how much of the pool worldwide are we going to have on our economy? So I have a tendency to try to focus on the companies and stocks that are more U.S. focused than worldwide focused, because that exposure is dragging a lot of those down. If you can look at the historical returns or analyst expectations of those stocks in the S&P 500s with less than 50% exposure worldwide, the cuts on those estimates are a lot less than they are on the others.